In this lesson, I'm going to do a VAT return with you. I downloaded the documents, the VAT 201 form, from the SARS website. So there we go, a VAT return demonstration, and I'm going to complete a VAT return with you guys. And Caleb and VAT Boy say, just pay your taxes. Caleb's just hooting his hooter there, just to check if you're awake. In this video, I'm going to demonstrate a simple VAT return. I've downloaded the documents from the SARS website, and we're going to work through a few transactions where I need to calculate output and input VAT. And remember, the amount of money that is paid over to SARS is output VAT less input VAT, and that is going to be the amount that is paid over to SARS. And the norm is to do this every second month on the 25th or before the 25th of every month. I'm looking at Calibu Education, our business, and I'm looking at the months for January and February. I've just made up the numbers, the figures. I've given transactions and amounts including VAT, and VAT Boy is just checking up on us. So these are the transactions. There were credit sales to the value of 125,373. Cash sales, there's the value. Office furniture, old office furniture was sold, and one of the scooters was stolen, so there was an insurance payout. New office furniture was purchased, trading inventory was purchased, and then there were sales returns. So we will see and calculate output VAT and input VAT on all these transactions. Credit sales, remember we add VAT to the selling price before we sell to our clients, our customers. We add 15%. So there is an amount here included in there, which is output VAT. Cash sales, the same thing. There is output VAT in the cash sales. The selling price of the office furniture, there is output VAT. Insurance payout, there's output VAT. New office furniture purchased. Office furniture is used for the operations of the business. It's necessary and it's standard rated, so I'm able to claim input VAT. Then obviously trading inventory, which I'm going to sell, I can claim input VAT. And sales returns, I'll quickly explain this. There were credit sales in the 2 months to the value of 125,373. Of that amount, I need to pay output VAT. But now, what happened was there were returns to the value of 10,500, including VAT. I'm going to reverse the output VAT, because basically, let's say these sales were cancelled. So I'm not going to pay output VAT of that 10,500 with regard to the returns. I'm going to reverse it, and I'm going to go and debit input VAT. So these are the transactions. We're going to use the VAT fraction to calculate all the VAT amounts, and then we're going to fill in the necessary documentation, and we will determine what is the output VAT and what is the input VAT, and we will see what needs to be paid to SARS. So that's what we're going to do in this video. Like I said, I downloaded the VAT 201 forms from the South African Revenue Services website, and the first page, page 1, is asking for the vendor details, a contact name and number, what is the capacity of the contact person, and then a signature on behalf of Calibre Education. There needs to be the VAT registration number, so all this information needs to get filled in. Calibre Education, there's the VAT number. I've put my name down as the contact person and the number I can be contacted on. Put in the date, and it's been signed off, declaring that everything on this document is truthful. So that's page 1 of the VAT 201 VAT return forms. And on to page 2 of the VAT 201 form. On this page, we're going to record the output VAT that needs to be paid over to SARS. So let's have a look. If you remember the transactions, we had the credit sales and the cash sales. It goes into block number 1. There it's numbered 1. You total the sales together. So it was the credit sales 125,373 plus the cash sales, and that equals 236,167. Now that is the VAT inclusive amount. The amount we need to fill in is the VAT amount. So we need to multiply this total amount by the VAT fraction. Multiply by 15, divide by 115 is equal to. So the output VAT from both the cash and credit sales is 30,804 and 39 cents. So from sales, cash and credit, output VAT is 30,804. Remember, we are using the invoice basis method. So when a transaction takes place, regardless of whether it's cash or credit, VAT is recorded. Remember, you can apply for to record your VAT on the payment basis when cash is either paid or received, but we're working on the invoice basis. That's why I've included credit sales and cash sales together. There was old office furniture sold. There's output VAT on that sale. It goes into block 1A, and the amount was 12,350 inclusive of VAT. I multiply by the VAT fraction and I get 1,610.86. Then there was also an adjustment. That was the insurance payout. It needs to go into this block here, block number 12. The amount was 5,750 including VAT, multiplied by the VAT fraction, and that is equal to 750. So we've got output VAT on sales, office furniture sold, and insurance payout. And the total output VAT must go into block number 13. There's block number 13. And if I add the 3 together, the output VAT for the 2 months of January and February, it is 33,100 165 and 25. So that's the one part of the equation. We have calculated the output VAT. We need to now calculate the input VAT. So let's move on. We are now going to calculate the input VAT. So let's have a look. We're on the VAT 201 form, page 3. Where could we claim input VAT? New office furniture was bought. It goes into block number 14. And the amount, the purchase price was 16,500, including VAT. We multiply by the VAT fraction, and the input VAT that we can claim on the office furniture is 2152 and 17. We purchased trading inventory. It must go into block number 15. 5,700 multiplied by the VAT fraction is equal to 743 and 47 cents. Then there were sales returns. We issued credit notes to our debtors who had returned stock or items for whatever reasons. We had credited their accounts, so we needed to reverse the output VAT, the original output VAT, and the amount of returns that amounted to 10,500. To get the VAT on that, multiply by 15 over 115, the VAT fraction, and we get 1369.57. So yeah, we have three input VAT amounts. We need to total them up, and the total input VAT for the 2 months is 4265 and 21. Now what we need to do next, we need to get the output VAT amount and subtract the input VAT amount from the previous document, previous page, not document, the previous page. The output VAT is 33,165.25 minus the input VAT, so it's A minus B. A represented output VAT, B represents input VAT, and the total amount that needs to get paid over to SARS is, wait for it, 28,904 cents. On the next page, we actually didn't have to complete anything on that page, but it is part of the VAT 201. If you did have any of these on land, offshore, rail and harbour services transactions, you would need to complete this page. I've put up this slide again just to recap. I'll go through it quickly. I calculated the output VAT, and there we go. I got the total. That was on page 1. There's the output VAT, just to refresh, and then I'll quickly go through the calculation of the input VAT. And this was the page where the input VAT was calculated, and I'll quickly run through it. There was new office furniture bought. There's the calculation of the input VAT. Trading inventory was bought and the calculation of the input VAT. And then there were sales returns, calculation of the input VAT. I total that up, it's 4265. Then we say output VAT less input VAT. A represented in the previous, on the previous page, the output VAT, and B represents the input VAT, A minus B is equal to the amount that needs to get paid to SARS. And that, ladies and gentlemen, is how you do a VAT return. It's as simple as that. You just need to make sure that you set up your software correctly to record input VAT and output VAT, and then it's quite easy to calculate. Don't you wish you were sitting on the river drinking something from the vat? Just kidding. I haven't had a sip of anything from the vat in years, but I would love to be sitting on the river. I hope you were able to understand that VAT return. Obviously, in a real life situation, there would be a lot more transactions involved, but if you've set it up properly, each account will, if you're using good software, the input and the output VAT will be recorded automatically. Have a good evening.